And good morning, welcome to this latest Harts podcast. I'm delighted to have with me Mr. Jason Elliott from Cowgill's Business Recovery, who is an insolvency partner, and they have offices based in Bolton, Manchester, Ilkley and Liverpool. So thank you very much indeed for joining us this morning.
Thanks for inviting me.
How do you actually get into insolvency? What made you start out on this career path?
Just lucky, I guess. If I can take you back, I'm a child of the 80s at school and left in 1990. Didn't really have a plan. Back then, not everybody went to university, and I was one of those who never really considered university as being something for me. So I got a job at 16, and I got a job in accounts receivable, credit control, effectively. Didn't really know what that was. Did that for a few years and enjoyed it. Then moved on to another firm and didn't enjoy the second firm doing the same job, because the first one was quite a technical credit control and the second one was just chasing people for money, and I thought, this isn't for me. But what it did do, it introduced me to insolvency practitioners. And the second place I was working was a brewery, and the brewery did what breweries do, which is they streamline the business, and I was offered a job in another office, wasn't earning enough. But over the preceding 2 or 3 years, I'd got to know 1 or 2 insolvency practitioners because we'd had bad debts. And one of them just picked up the phone to me and said, listen, do you want to come in and talk to us? We think you might be suitable for this. Didn't really know anything about it. Went in 1996, 1997 and just loved it. And it went from there.
What did you enjoy about it the most? What really gets you up in the morning?
What I enjoyed about it back then is what I still enjoy about it to this day. And having worked at only 4 firms, I like talking to people. Now, unfortunately, I generally talk to people in the lowest position, the most distressed financial position they're ever going to be in. But I like problem solving, and I believe that there's always a solution. The biggest problem I have as an insolvency practitioner is that historically they've come with, this red flag, if you will. You don't want to do that. So we only get in there quite late, and the later you get us involved, the less options generally there are when you're talking about financial distress. But hopefully the world has changed. We're massively regulated, and we get in, and I love to have a look at where the problems are and whether or not they can be solved, and just putting people at ease. And, as I said, I've worked at 4 firms. The one that really didn't work out for me was the big one, because the big one, I lost this. I became a small part of a big cog, and, counting widgets all day as part of a big trading might sound, I'm doing a big job. But the reality is I wasn't having this one-on-one like I'm having with you, understanding the problems and trying to solve them. And that's what I liked on day one, and that's what I like all these years later.
So you see that problem solving is one of the main attributes you're going to need for doing the job that you do. You're often dealing with people and clients that are at their lowest ebb. You've seen their life's work fall about around their ears, and everything's gone to pot. How do you actually deal with that?
Sensitively, but the way I've always dealt with it is just to be honest with people. And my modus operandi is to listen to them, and even when they're at the lowest ebb, if there are going to be problems in doing what I think the right things are, they need to understand that, and they need to understand that I'm there to help them. But it's not necessarily all plain sailing. And I tend to find that if I'm honest whilst being sensitive, even if there is some pain further down the line, if they know about it beforehand, they get to walk away from it understanding where the pros and cons are of where the solutions are. I'd love to give everybody a complete utopia, but it doesn't happen all the time. So it's about being sensitive, absolutely, but more importantly, being honest. And that's the only way I know to be. And what it's allowed me to do over the years is to forge great relationships with people, because they can trust me to sit in front of their clients knowing that I'm not selling them anything. I'm trying to give them advice which might not be entirely palatable, but will get them to where I think they need to be at the end. And eventually that's where everybody wants to get out of this funk that they are in. And a lot of times it takes over the life. Wherever the pain is along the way, they need to come out of it, Stephen. And we need to tell them how they do that, even if it's not that utopia they might like.
Do you keep a box of tissues on the desk a lot of the time to help them out?
I do indeed, yes. So
I presume you have plenty of people break down over the years. It must be something you get used to.
I've had all kinds, and just taking you back, I have to know that there's an added value. And that's one of the reasons that I made a decision many, many years ago to not really do personal insolvency. I didn't like the way personal insolvency was going. I don't like telling people that I have to sell the house as an example, because that isn't a solution. That's a job I'm doing, don't get me wrong, and there are lots of people that will have a difference of opinion on it. But for me, I like corporate insolvency because I like problem solving. I don't want to be a grim reaper for the sake of being a grim reaper, if that makes sense. So yes, I've seen all sorts over the years. I've had people cry, I've had people shout. One of the things I've always insisted on doing is speaking to employees. When we're having to close businesses down, I like to speak to them. They don't always like to hear from me, so I've been pinned up against the wall. I've had my car keyed. I've had my headlights punched out. It tends to be the car that gets it more than me. I've been shouted at. I've had all kinds of things. But the reality is, when everybody's calmed down, it's very emotive. They know what needs to happen because I've told them. So you get all kinds in my job. It's a moving feast.
Moving on to the corporate insolvency side, and there's a lot of talk around at the moment about bounce back loans and the government support, and there's been a lot of stuff in the press about how there's going to be huge losses for the government and how so many businesses have taken advantage fraudulently of this. What's your view? What are you seeing so far?
So my view when it started hasn't changed, and whilst I'd never like to say I told you so, I told you so, because when Mr. Sharma came out on day one and he announced these reforms, now I've got to say it was an unprecedented position that the government were in, that we're all in. So therefore they had to be seen to be acting quickly. But when you are giving money away, which is what they were doing, going back to one of the last things you said, certain people will take advantage of it, and that's what's proven to happen. When Mr. Sharma started out with the C-bills, and then they moved on to the bounce backs, and he also came out and said, we're going to suspend wrongful trading, and we're going to put a moratorium on creditors being able to chase you. It potentially becomes a charter for people to take advantage. And what we found in insolvency, and I'm not criticising anybody for this, because people that are in a dire financial position that are suddenly beginning access to money, who am I to suggest that they wouldn't do that? But what it did was it intensified the zombie company, the business that prior to the pandemic shouldn't have qualified for these reliefs because there weren't the necessary checks and balances. Everybody was being given it within reason. So what it did was it promoted, or it prolonged, businesses that should have gone under and would have gone under had COVID not happened, and that isn't what it was supposed to do. But because there weren't the necessary checks and balances, that was always going to happen. Then we come out the other side, and suddenly the government are going, oh crikey, people have taken advantage. Of course they have. They were always going to do that. So now they are coming down hard on these people. Now, should they come down hard on these people? Probably. Should these people have taken, these directors, have taken these reliefs? Probably not. But put yourself in a human situation where you don't know how to feed your family, you don't know where the world is going, and the government are saying, we want to support, there you go, and there is no wrongful trading. Yes, there'll be checks and balances, but if you apply now, the money will be in your account by 2:00. It was a ridiculous situation. So am I surprised? Absolutely not. Am I being affected by it? Yes, because all of a sudden, as IPs, we are being told you have to investigate whether or not these directors should have taken these reliefs, if you will, and the bounce back loans especially. And you'll have seen, Stephen, that some directors now are getting disqualified for, 5, 6, 7 years for taking these. But more importantly, they're being pursued by people like me personally because they did use some of the money for things that they shouldn't have done. But
I think it's there's been a lot of stuff in the press as well about how they can't be chased personally, which is incorrect.
It is incorrect.
And their own personal livelihoods are upon the line. It's not the banks that are going to be chasing them. It's people like yourselves and insolvency lawyers who are going to be chasing them. Is that correct?
Yeah. So what happens is, and this goes back to what you said about my modus operandi, and we've turned down quite a lot of jobs because we sit down with them on day one, and when they've taken a bounce back loan, my first question is, what have you done with the money? Because it's very, very easy to think that I can justify what I've done. Well, that's your question. Once it goes into liquidation, we have a duty to look at actually not what you've told me, but what does the bank statement show? And if we're not happy with what they've done with the money in terms of did it fulfil the criteria of a bounce back loan, then we class it as a director's loan account and we pursue them for it personally. Now, everybody's got a right of defence, don't get me wrong, but my modus operandi, and forgive me, I keep using that word, is now to understand. Don't tell me you think everything's all right, because there's real repercussions here for you. So we will go through it with them. And if we're not happy with it, we will say, if you go forward with this, we are coming after you for all or part of this. What do you want to do? So it isn't correct to say that, it isn't correct, by the way, away from the bounce back, to talk about the C-bill saying, you only worry about 20% because the bank are covered. It isn't that straightforward. Now, I won't bore you with all that now, but the overriding principle is the advice at the outset is absolutely paramount, where you've either given a PG under a Sybil's, or alternatively, you've taken a bounce back loan where you may not have used the money correctly. Be absolutely clear that it is me that comes after you, or any other IP, so anybody must get that advice before they move forward with it.
I don't think that was actually made clear when the bounce back loans came out. Basically, everyone said, "Oh, it's no guarantee, just take it and you'll be fine."
Do you know why though, Stephen? Because they made it up as they went along. The government made it up as they were so keen to get something out there to make people feel they absolutely didn't think it through. And the C-bills, I have some understanding. I thought that was much more thought through because the banks were brought in and the banks did their own checks to a point. The bounce back loans was literally like getting a payday loan.
Two-page form to fill out.
Two-page form, it's money's in your bank, there you go. And then 2 years later, they're suddenly going, hang on, we're not happy with this. So they've changed the goalposts on these people. Now, if you've abused it, you've abused it. But there are levels of abuse. And some people legitimately, or thought legitimately they were using it. And now I'm being told that isn't legitimate, so you must go after it for them. I don't agree with it, but it's important everybody understands that it is not a straightforward, I've had the money, I can't be pursued. You might be able to, so you must get the advice.
Moving on to HMRC's role in insolvencies and liquidations, administrations and so on. What's their view at the moment? How are they operating? Because we hear service levels are not great at the moment. What's your experience of that?
Well, my experience is great, and I could go on and on and on and on about this one, but just to make sure that you don't run out of videotape, going back to my 80s childhood, it's not good. It's not good. So let me give you an example. A members voluntary liquidation, which is just a solvent liquidation, we are now telling directors that to get the final clearance from HMRC, it's taken up to 12 months. It used to be 3 as an absolute max. They were 12 months. Now they've just changed the procedure last week, where they're now trying to get it all done much quicker. The proof is in the pudding, we'll see. But it's a nightmare getting them to agree or not agree on anything at this moment in time.
Why is that? Because
they haven't got the staff to deal with it, because they've got such a backlog. Because during the COVID position, they were that busy dealing with other things. They didn't deal with anything in terms of insolvency. So now, whether it's getting clearance for MVLs, or whether it's getting an understanding as to whether or not a property has had a VAT election, or a dereg, a VAT dereg, something so simple, it takes weeks or months, and it's not getting better, but it's something we're having to deal with.
Can you briefly explain for our watchers and listeners the difference between a liquidation and an administration?
I can, yes.
Very briefly.
Very, very briefly. So, in very, very simple terms, if I recommend a liquidation, forgive the terminology, what I'm saying is it's dead. Let's bury it. Let's pick the bones out of it. Let's pick up this settee and sell it at auction, get what we can for it, shut the thing down. In an administration, what we're saying is the company is insolvent. But there's an underlying business here that actually, I think with some tweaks, might be of value. So let's see whether or not we can sell it. Let's see whether or not we can save jobs, we can get proper value for creditors. Let's see. So the first one is it's all dead, let's bury it. The second one is it's insolvent, it's irretrievably insolvent, but there's some good stuff here. So let's try and see if we can save jobs and sell the rump of the business.
And how often does it come out of administration and carry on trading? Is there a kind of a 50-50 or survival rate, or what do you reckon?
Depends on your question. So without getting too technical, it is very, very infrequent that the same company comes out of administration. What normally happens is that the existing company dies, but a new company, a phoenix if you will, whether that's by way of the existing directors, or we sell it to a third party.
Sure.
Normally, the administration is concluded by the old company being dissolved,
Yeah.
but the business and assets and the employees being transferred into another business, which is either run by the existing directors or a third party.
Okay.
And to answer your question, sorry, Stephen,
Yeah.
to answer your question, that happens a lot. You know, we wouldn't normally do an administration without thinking we can do that.
Okay.
So to save it 80% of the time,
Brilliant.
for it to be the same company that survives administration, 5%, if that.
Okay. I know you've been heavily involved in some of the football clubs around the area, especially Bolton Wanderers, and I know you're a lifelong Bolton fan.
Yeah.
What happens when a football club specifically goes into liquidation? Because we often hear of these huge amounts of debt, which is mainly HMRC debt. How do they actually get into this situation in the first place?
Okay, well, they get into the situation because a football club, for all intents and purposes, ignores the principles of business, i.e. profit.
Yeah.
And there aren't many at any level within the football pyramid that makes a profit. Now, there'll be some people watching this that go, my club doesn't, and that's true, there might be. But it is the exception to the rule. There is not a lot of profitability around football. It is generally something that is run because you have a benefactor. And that doesn't happen very, very often. So, how did I get involved? I am a Bolton fan, and my club was in trouble. And my firm was the auditors of the club when it went into administration, and I made contact with the administrator. And to just, without getting too much into Bolton Wanderers scenario, it was complicated because the football club, and if you know Bolton, has a hotel attached to it, but they were in two different companies. They both went into administration with two different administrators.
Right.
So that was complicated. I wasn't interested in the hotel side. That is what it is. But the football club, it's in my heart. And we were auditors, excuse me. So I wanted to help. So I made contact with the administrator, and he was great. And we worked together, and I helped where I could. And I learned a lot about football administration because I was so involved with it. And I thought the administrator did a great job in very difficult circumstances. And then I got involved a little bit with Derby County, which you know as well. So I've never been the administrator of a football club, and having been so involved behind the scenes, I'm not sure I would want to. And I think we'll move on to that in a minute as to why. But it's close to my heart. It is a flawed system, both as a business, but it's massively flawed when it all goes wrong as well, in my opinion.
Okay.
So to answer your next question, which is what happens in an administration, well, they've got their own rules. The EFL have got their own rules, and some I agree with and some I don't. But the fundamental thing that I disagree with is the money that has to be paid to bring a football club out of administration. Because if I take Derby County as an example, the ground wasn't owned by Derby County. The players aren't really, the registrations are, but the reality is the football club is going to get relegated, and therefore it becomes an expensive commodity. But in order to get Derby County to get the seal of approval from the EFL, you have to pay an amount. And that amount is based on paying the secured creditors in full, paying the football creditors in full, and you might well ask me about what that means in a minute, but paying the football creditors in full, and then doing a minimum dividend to the unsecured creditors of either 25 pence in the pound or 35 pence in the pound. Now, when you take Derby that own all that money, what you're saying to me is you don't own the ground, the players aren't really worth anything, there's not a lot of value, but if you want to buy Derby County, to pay everybody off, to meet that requirement, it's going to cost you £60 million.
Right.
I look at it and go, why would I do that?
Yes.
I wasn't involved in that. So what you can say is, I'm not willing to pay 60 because that's the 35 pence in the pound, but I will, because I need to pay less than that, pay you 25 pence in the pound or 15 pence in the pound. They can look at it and they can say, okay, we'll do that, but then we're going to give you an embargo for 2 years where you can't sign anybody.
Right.
So you're being penalised. You're still paying millions of pounds. You can't sign anybody. It is such a flawed system. And my biggest thing throughout, and you might mention Bury in a minute, is that unless you find somebody that wants to come into a flawed business that isn't making money with an embargo in a League One or League Two scenario with a load of historical debt,
Why would you do
Why
that?
would you? Which means clubs are going to fail.
Yeah.
Now, Derby got away with it like us by the skin of their teeth. I promise you, by the skin of the teeth. We got away with it because we had one very, very dogmatic purchaser, and they were pushed to the limit and they got it over the line. Had they at any stage walked away, we were in trouble. Derby were very similar. Our history went for us. Derby's history went for us. What happens when somebody turns round to a club and says, I'm not prepared to do that? So my opinion is, if the EFL, and we've talked about, or it's been talked about ad nauseum about the directors, are they fit and proper?
Yeah.
But until the EFL change their rules in insolvency, because insolvencies happen, you are going to find in this day and age that as more clubs go under, less of them come out the other side, and that's a real problem.
And more clubs are likely to go under.
Yeah.
Obviously, we've seen Bury, we've seen Macclesfield, which has now been rejuvenated here with Robbie Savage, and you expect more clubs to go, presumably.
I do, because they don't make money.
Yeah.
Now, unless you can cut your cloth accordingly,
Yeah.
you don't make money.
Okay.
And the moment the benefactor says, you know what, I've had enough of this, you need a business model that works.
Sure.
But there's not many business models. Certainly when you look at the way the money flows down the pyramid, it's very difficult for a Macclesfield, a Bury, to make money.
Absolutely.
So therefore you need that bit of benefactor. Well, and I don't mean this disrespectfully, who wants to plough £1 million a year in, as an example, to fund the losses of a Macclesfield? It's different with a Derby County, but at the lower end, and I'm only saying Macclesfield because of where we are, so please don't.
Yeah.
But who wants to do that?
I know.
And that's the problem.
It's the age-old joke, isn't it? How do you become a millionaire out of football? You start with 10 million, you spend 9.
Yeah,
exactly.
Correct. Yeah.
You've obviously been in business for quite a long time. Any really funny moments that you've come across?
Depends on your definition of funny. I once did a bus company.
Yeah.
And again, it was very, very emotive. And I went to what was GMPTE at the time.
Yes.
And I went to them and I said, listen, we need some money to fund this bus route. And they wouldn't do it for me. So I had to get hold of the directors and say, you need to pull the buses in. And they pulled all the buses in. But what they hadn't realised is that there was a lady asleep on the back seat of one of the buses. So I had to get all the employees, all the drivers, to literally drop everybody off. That didn't go down very well. They come all the way back, and I'm addressing them. And as I'm addressing them, I see this little old lady sit up in the back of a bus. I had no insurance to get her back home, and we had to put her in one of our cars and just drive her home. So that was quite amusing.
Okay. Quick fire round: chippy tea or fine dining?
Oh, chippy tea.
Right. Boris Johnson, Liz Truss, or Rishi Sunak?
Boris Johnson.
Why?
I couldn't get past Rishi Sunak's role in everything we've just talked about in the pandemic.
Yeah.
I thought the way he handled himself, he came across very, very well. But for me, the damage had already been done when he had the role of the Chancellor Exchequer. Liz Truss stood by Boris Johnson. But I don't see any differences, and the changes that she's making, I just look at it and think, I'm not sure. I'm no Boris Johnson fan, but you haven't given me a lot to work with there. So of the two, it wouldn't be Rishi Sunak, so it would be one of the other, and I would just say Boris Johnson, not because I'm a fan, because I'm not. But I thought, whilst he got lots of things wrong in the pandemic, he was in a very, very difficult position. So I would probably give him that little bit of credit that the other two haven't earned. But that's the best I can say.
Finally, Dragon's Den or Coronation Street?
I haven't watched Coronation Street in 40 years. Can I just say something about Dragon's Den? I used to love it until it became more about the dragons. And nowadays, I like the businesses, and now it seems to be more about the dragons. So I'm not a big fan of either of them. I did enjoy Stranger Things Series 4, though. Have you seen that?
Yes.
You want to watch that? That's really, really good if anybody's not seen it.
Yeah.
So I'd have to go Dragon's Den. But please, stop making it about the dragons.
Yeah. Jason, thank you very much indeed for joining us this morning. It's been great talking to you.
My pleasure, sir. Thank you
very
so much for
indeed.
the invitation.
Please join us on our next edition of our next Harts podcast, which will be coming soon.